gold can do that Bitcoin can't do. You can use it in industry. It has all these kind of practical purposes. But as a money, Bitcoin is in many ways more powerful. It's able to beam around the world in 10 minutes, even faster by using some higher layers. And I think another way of kind of thinking about it is because especially with your audience and in general, anyone who's technologically minded, our first thought is, well, the first technology is going to be the one that gets displaced. It's going to be some later thing that comes and displaces it. And the way that I've kind of conceptualized this is that the really big exception for that is communication protocols. Those so far tend to have a very long life cycle of lasting. So whether it's Ethernet, whether it's simple mail transfer protocol, whether it's TCP/IP, whether it's USB, once these things kind of become dominant in their fields, they tend to one, they update over time. So what displays as USB is the next USB.
Many people are currently making a silent error. They don't own any Bitcoin because they never bothered to look at it, not because they researched it and decided against it. As the global financial system gradually rewrites itself, they shrug it off as being either irrelevant or too hazardous. History, however, is not waiting. In a world where money is constantly redefined, more organizations, central banks, and regular citizens are reevaluating what it means to store value every year. Maximalism is not what Lyn Alden is advocating. She's not telling you to go all in and sell your house. Her point is more straightforward. Perhaps 0 is the incorrect number. You can appreciate the benefits of touching the rails of a parallel financial system without being an ardent supporter of Bitcoin. Transmit a transaction, keep a tiny quantity. Learn by doing. That tiny action has the power to change your perspective, because Bitcoin is only theory unless you use it. Furthermore, theory doesn't alter behavior. The game's skin does. Therefore, perhaps it's time to stop waiting for clarity if you've been watching from the sidelines. Take a small plunge. Not to become wealthy right away, but to understand what the future might genuinely be like. To help you better understand Lyn Alden's bombshell interview, let's show you a few more videos. For more in-depth material, don't forget to like, subscribe, and turn on notifications. Thank you for coming back. Watch the remainder of the video.
So I think Bitcoin is going to grow into kind of the role that gold fills to some extent, but then potentially has a avenue to grow further still because it's able to solve things that even gold itself as a money can't solve. So there's certain things obviously gold can do that Bitcoin can't do. You can use it in industry. It has all these kind of practical purposes. But as a money, Bitcoin is in many ways more powerful. It's able to beam around the world in 10 minutes, even faster by using some higher layers. And I think another way of kind of thinking about it is because especially with your audience and in general, anyone who's technologically minded, our first thought is, well, the first technology is going to be the one that gets displaced. It's going to be some later thing that comes and displaces it. And the way that I've kind of conceptualized this is that the really big exception for that is communication protocols. Those so far tend to have a very long life cycle of lasting. So whether it's Ethernet, whether it's simple mail transfer protocol, whether it's TCP/IP, whether it's USB, once these things kind of become dominant in their fields, they tend to one, they update over time. So what displays as USB is the next USB rather than literally a competitor. And two, the complexity and the fast moving parts, that tends to happen at the periphery or on higher layers, whereas the core of the system itself is kind of very simple. And I think that Bitcoin is kind of following a similar approach, which is this new communication protocol that exists. And in this case, it's a communication of value, and it's achieved basically network effect dominance. So it becomes increasingly less likely that something within its own field will displace it in a similar way that Ethernet and USB and others have kind of achieved dominance. And therefore, it's going to grow into whatever total addressable market it has, which I think is north of gold's current 2% of global assets. I don't think it's silly. I think that basically people solve the problem they have. And for most parts of the world, people, when they wake up, they don't have a payments problem. They have a store of value problem. That's something that people in developing countries have. And then even in developed countries, we just have a slower version of it, is where are we going to store our value? So that's something that basically 8 billion people in the world have as a problem. payment problems, while some people have them, they're way less universal. Most people in developed countries don't think I have all these payment frictions all the time. Now, certain areas do. There has been, for example, debanking. In certain countries, people have the issue. Like I point out that there's over 40 currencies in Africa. There's over 30 currencies in Latin America. So we can imagine in the United States, if every state had a currency,
Oof.
and imagine all the cross-border frictions, not just in terms of payments, but in terms of cross-state lending and things like that. So if an entity in New York wants to lend to an entity in Michigan, and you're balancing 50 different currencies, and so a lot of the world actually kind of lives under that type of friction-filled system. So especially in a cross-border sense, you're more likely to have payment frictions. So I think that the problem that Bitcoin is kind of filling into, the thing that it's solving, is more that portable store value problem. So it's portable capital. But then around the margins, it can also solve payment problems for those that have it. But then in addition, that's a crowded field. So for example, stablecoins, not for every person, but for a lot of people, stablecoins solve a lot of their frictions as well. So going back to that example about Africa, like you'll see a lot of stablecoin volumes happening in several countries there, like Nigeria, because especially for shorter term holding and paying, stablecoins are equal or in some cases better than Bitcoin at that specific task. And where Bitcoin really shines is that over that long arc of time, it can't really be sanctioned. It's not centralized. It doesn't debase. It's truly permissionless rather than this kind of centralized node on top of a blockchain. And so I think over time it grows into more of that payments aspect. But I think in the current time where it's high volatility and it's growing into its total addressable market, it more serves as that kind of portable capital aspect. So I think it makes sense for someone to do it. I mentioned before that basically in this current system where you have debasing currency, anytime someone can borrow or short fiat currency and go long another asset, as long as they manage risk and volatility well, they get rewarded for it. So I think it makes sense that someone figured that out. You can do it with Bitcoin. It was actually written about by Pierre Richard back in 2014. He wrote an article called Speculative Attack, and he's like, someone's going to figure out that if you can borrow fiat currency and buy Bitcoin, you're just going to keep doing it over and over and over again. That started happening 6 years later in 2020, and it's been happening ever since. And we're starting to see it in other companies as well. So Metaplanet of Japan, a bunch of others. I think that makes sense. I do think that, this cycle will hit a degree of froth in it. And so some of these levered entities will get shaken out. We've also seen, altcoin treasury companies spinning up, which I think, looking back years from now, will probably not be seen as very positive things to have done to, use leverage to kind of stick altcoins in a publicly traded vehicle.
The conventional 60/40ths portfolio is becoming less relevant in the current inflationary and debt-heavy climate. Investors are shifting to a combination of stocks, hard assets like gold and commodities, and Bitcoin more and more as bonds deteriorate and currencies depreciate. In contrast to its early days, when it was only available to private citizens, Bitcoin has become a mainstay of international finance due to its widespread adoption into company treasuries, pension funds, and even governmental reserves. Strict accounting regulations, however, discouraged businesses for years. Balance sheet exposure was discouraged by the fact that losses were recognized, but unrealized gains were not. The majority of executives believed that owning Bitcoin was too hazardous due to its volatility. Rather, businesses used low-cost fiat borrowing to finance stock buybacks. Adoption is speeding up now that Bitcoin's market value has surpassed $2 trillion, and more accounting clarification has been added. However, the brave and closely regulated companies are mostly driving the change and establishing Bitcoin as a viable option for institutional and sovereign portfolios. Let's view other excerpts from her interview.
Yeah, I think basically there's been a long history of, altcoins have one or two good cycles under their belt. When they come out, they get launched, they get hype, but then they kind of roll over relative to Bitcoin and then never really recover. So that's been kind of the case over and over and over again. And I kind of expect that to keep happening just because of that communication network effect aspect that I talked about before. So a lot of that is PvP. I think when you put it in a publicly traded vehicle, it gets a little bit more potentially serious, or the scale's bigger. I think a lot of them can make good trades, but I think that none of them really have the quality of a treasury asset, which is different. Basically, it's something that I think there's a difference between like a hedge fund holding a trade versus a publicly traded company using it as a long-term treasury asset. I think Bitcoin has met that standard. I don't really view others as having met that standard. I think they're more like penny stock tech plays, basically, where, for example, I'm on the record of being bullish on stablecoins. So obviously, any sort of rails that enable stablecoins to function have some degree of value. So I think it's not to say that there's no value in the space, but generally speaking, it's inflated because there is this really big speculation element and this PvP element kind of built on top of it. And so I think over time you've kind of seen the narratives play out. And now the narratives in that whole space are pretty weak outside of stablecoins and certain other forms of tokenization.
Do you use debt to buy Bitcoin?
I do not, but I mean, I've been long MicroStrategy since 2020. I viewed it, I treat it as a much smaller position than core Bitcoin. And then anyone who has optional leverage that doesn't get rid of it is in some ways using leverage to buy assets. So, for example, I have purposefully I have mortgages attached to properties because if I can short fiat currency at 3% for the long term, I figured instead of selling stocks or selling Bitcoin to pay that off, I'm kind of indirectly slightly levered on assets. But for the most part, I let other proxies do it for me. I let MicroStrategy do that for me rather than myself hold Bitcoin in debt.
The notion of a strategic Bitcoin reserve for the U.S. is evolving from conjecture to actual policy discussion. Galaxy Digital's Alex Thorne contends that because of legislation, White House signals, and growing international competition, markets are discounting the likelihood that it will occur this year. Congress is currently investigating the viability of the executive order that Trump has already issued, which lays the foundation. Delays might leave America behind as nations like Indonesia and Kyrgyzstan investigate state-level reserves. According to some, Lyn Alden's caution that neutral assets like gold and Bitcoin are logical substitutes in a world where fiat dominance is waning is echoed in this discussion. The dollar's post-war dominance has diminished, and central banks are covertly hedging. A momentous change would occur if the U.S. officially adopted Bitcoin, turning the formerly unstable outsider into a key component of national strategy. The momentum is undoubtedly increasing, regardless of when this occurs in 2025 or later. In conclusion, what do you believe will take the place of the dollar as the dominant currency? Like Bitcoin and gold, are there any other fiat or neutral assets? Please share your opinions in the comments section below. Please use the like button and share this video. Thank you for viewing, and please remember to subscribe.